Hello everyone, I'm Harish Naik from donkeys.com. In our series of understanding businesses, today we have it with us Mr. Siddharth Siddhani from the Anand Rathi. He is the Vice President and the Advisory Head for the Anand Rathi. Anand Rathi has come out with an interesting coverage on a company, Saregama India Limited. This company is interesting not only from the investment point of view, but also for the people who are fond of music, especially for the musics in the 80s, 60s, and 70s, because this company owns most of the music rights for those songs, especially by the Lata Mangeshkar, Asha Bhosle, and Kishore Kumar, and other legends. So, sir, my first question to you is, sir, what is the current revenue driver for the company? What is the current source of revenue for the company? And can you give us the segment-wise breakup for the revenue?
Well, the music for Saregama brings in 66% of the revenue for the company currently, and films and televisions and publication businesses rest of the revenue, so that could be around 34%. This company has an IPR for more than a lakh music tracks. So the major core business is music, and that is 66% of the revenue.
Sir, my second question to you is, sir, Anand Rathi expects its revenue for the FY20 to be 561 crore compared to the FY17 revenue of 218 crore. So, what do you feel will be the key driver of the revenue going forward?
Well, currently for this business, the main key revenue comes from license fee and TV serials. But going forward, what we expect is the launch of Caravan and Yoodli movies can be the main growth drivers. Now, the question comes, what is Caravan? Caravan is a music set, something like a transistor kind of a design which they have made, which has an inbuilt 5,000 songs of historical 5,000 songs with different moods, different singers, and different sections. This set is available maybe online and other stores also. This is a unit which they have exclusively made out. This is Caravan. Usually movies are short movies which company makes as a production. They may run it through the digital platforms as well as they may run in some of the uh, theaters as well as some of the multiplexes. Of course, there would be box office also involved. So usually is short movies to be very precise. So of course, these two main drivers of the business can be Caravan and Yoodli movies, and we expect around 48% revenue to come from this business by FY20.
Okay. So, my next question to you is, you expect margins to improve. Now, the margins are on the single lower digit, and you expect it to be on a double digit by FY20. So, what will the margin driver for this company?
Well, if I talk about FY17, the margins were around 5% due to the company was not focusing towards B2C segment. Now the strategies have changed. As we see the new CEO coming in place, the strategies have changed. B2C segment is in focus. As I rightly explained you before, Caravan and Jubilee movies. These two can change the dynamics of the company, and we expect the margins to reach to 16 odd percent going forward. And there could be a strong spike up in terms of margins because of these two products and because of focusing more towards B2C segment.
Okay, sir, what will the risk for the company? Is it going to be the quality of content or human talents like actors, directors, or is it going to be like piracy? What is going to be a major threat, and how do you feel that company will be able to tackle this threat?
See, main threat for this business is piracy, of course. Company is working out on this aggressively. On top of it, company has an IPR for their music tracks which they have. So, of course, that is one part. Apart from that, government is also trying their best to curb the privacy. So, privacy is one region which most of the music as well as film industry is reeling under pressure. So I think this is diminishing going forward because as we know, if we compare with global world, India has little more piracy kind of a thing issues. I think that is coming down. On top of it, the peer competition is always a point which can pile up pressure for the company. But I think at the end of the day, when you have IPR, I don't think there would be much to worry. But of course, there is always threats from competitors and piracy.
So investors nowadays like very cautious about investing in companies which has a heavy debt or trading at a high valuation. Sir, can you throw some more lights on the company's balance sheet and on the valuations?
Of because at the current state, interest rates are still higher. It is expected, but the companies which has high debts are always under pressure. If we talk about Saregama is virtually debt free. If I talk about the cash flows, we can expect around 89 to 90 crores of a cash flow between FY 18 to 20, virtually debt free. So overall perspective, what we believe, the currently company is trading around 26 times FY 20 earnings. We can expect going forward earning growth of 113% profit growth for next 2 to 3 years. So overall, being a virtually debt-free company, valuations are okay, and we assign 35 times FY 20 earnings and arrive at a target price of 1202 for Saregama, and we expect this company to perform fabulously well in the niche business which they are in.
Sir, lastly, I would like to thank you so much for giving us your time and valuable opportunity to talk to you. And as Warren Buffett says, it always helps to understand your company before you invest. So this is our initiative for our investors, for our viewers, so that they could understand the company before they invest. And in the end, I'd like to mention the disclaimers. Investments are subject to risk. Please consult your financial advisor, investment advisor before taking any investment decisions. Happy learning. Thank you so much, sir.
Thank you.